right, welcome back, everyone. Today we have Jonathan Farber with 7 Day Bookkeeper. And yeah, there's a lot when it comes to short-term rental operations. And one of the biggest things we need to do is understand our numbers. Because at the end of the day, these are investments. We need to understand what our numbers are going to look like. And there's no one better than Jonathan Farber here today that also specializes in short-term rentals to help us understand how do you actually track your numbers, and then when we're qualifying for this tax benefit, what do we need to have our numbers looking like in order to do that successfully with the CPA and so on. So Jonathan, thank you for being here. If we don't mind, just starting with a quick 60-second intro about a little bit about who you are and what you do.
Yeah. Hey, Ryan. Thanks. So long and short on me, I'm a real estate investor first. I still own and operate 8 STRs myself. I just did not like the solutions that I was finding and getting from bookkeeping and accounting solutions. Either the work wasn't being done right, or it was just too expensive or too complicated. But I just needed something that would show me the numbers on a monthly basis and help me get approved more loans, but also help me make decisions in what's going on with the business. So in a lot of cases, people, like myself, I felt paralyzed in making a decision on which way to go. So that was it on the bookkeeping side. And then just on my life side, I was working in corporate America until 2020. And then right before COVID, I hit my FI number, financial freedom, through real estate. So I really just doubled down on being a real estate investor. And the team, everyone that works for me is virtual. But again, for me, it's just how can we do something that is maybe not the most fun part of the process or any process we work on? And how do we just put it into steps, automate it, make it efficient, and then, make it so that anyone can kind of do it. If it's going to be someone on our team, someone that we work with, just being able to do what they need to do, but just to sort of boil complex things down into simple setups, just so that we can kind of all focus on what we want to do, which is maybe making more money, making content, doing whatever. So, I think it's important just for all of us to remember, what is the point of business? And typically it's freedom and making money. And a lot of times we end up doing stuff in the day-to-day that isn't enabling us to do that. So yeah, that goes for a lot of things, but just for the sake of this conversation, bookkeeping kind of fits in that category as well. So yeah.
Yeah, for me, that was absolutely something that I realized was not one thing I was passionate about or excited around. So I made my first hire as a bookkeeper to have that off my plate so I can focus on the things that I wanted to focus on. And a lot of our students here are doctors, lawyers, high income earners that are buying their first short-term rental. So what do you wish that person knows or would learn about bookkeeping before they close on their first property?
Okay, there's a couple of places to go with that. Ultimately, what bookkeeping is just categorizing. I think it's actually good to start with definitions of what is a bookkeeper? What is a CPA? What is an accountant? What is a tax filer? I think just starting sort of high level and then bringing it down sometimes helps. The way that I look at it is the bookkeeper is the person that just keeps the current numbers of the business in good standing and good order to know what's going on so that decisions can be made. That's creating something called a profit and loss or a balance sheet, just to know the most simple question that every business owner needs to think about. Am I making or losing money? And how much is it? And then am I prepared for when bad things happen, which happen in real estate? So that's what the bookkeeper is doing and can help organize data. The CPA or accountant, they're synonymous. There's sometimes, little things that people stand on differently, but their job is typically to file the return. So they take the numbers from the bookkeeper and then they put them onto something called a schedule, and then they submit those to the government, and those are tax filings. And then you have the other category, which is tax strategy, which is usually also still done by the CPA or the accountant. And what they're doing is, again, taking the information from the bookkeeper or bookkeeping, and they can help you make decisions on it. Okay, you might want to buy this thing, or you might want to try reducing something so that it can be less in taxes. They're going to help with tax segregation, maybe strategy, or large write-offs, things like that. But they can't do their job unless they have the information. So a lot of times accountants are sort of stuck. They can't do the work they want to do until the books are clean or current. So that's why a lot of times there's these battles that happen between bookkeepers and accountants or companies just because things aren't up to date. So ultimately, for me, I looked at the numbers as a decision-making tool so that I could decide what I want to do with the business, if there's properties I want to sell or change, but then also how do I actually want to go about doing tax strategy. So that's the basic thing. As far as other things I wish I would have known is just starting simple is good. And there's just a few fundamentals that we like, but there's nothing wrong with starting in a spreadsheet if you're cool doing it, and you can kind of watch some of the videos that I'll give you or some of the tools that I'll give you, and you could just kind of present to people just basic stuff. If you want to do it yourself, which sometimes is good, sometimes it's not, like you can do it. And a simple way to do that is just to have one bank account, one credit card, one debit card per property. Like that's not an end all be all system, but for a lot of people, that's just very straightforward. You can just fund it with like personal funds to start. If you're going to need to buy furniture or close on a down payment, or repairs, you can put money in those accounts to start and then go forward. So anyway, that's what I would just say, like sort of what I wish I would have known starting out is like who does what, and those are the definitions of those people. And then what is like the most basic, simple way that I could start this of just making sure that whatever I'm doing for my business is isolated from personal transactions. You just don't want to have, no matter what phase you're in, you don't want to have personal and business funds commingled. It's like a fancy word, but it just means like you're spending money on a business account for a personal thing or vice versa. So avoiding that from the beginning is really important.
Yeah. And you touched on it. So in terms of accounts to open, so having a bank account specific to the property, having a credit card specific to the property, as well as a debit card that comes with that bank account. Any other accounts that need to be opened? And do you have a preference in terms of any of those accounts that you'd recommend people towards?
I think, and like, I'm the last person that'll ever like knock the way that other people do it. Like if it works for you, it works for you, great. There's just ways that I found for myself that they just got the job done. They were simple and they were inexpensive and didn't require anything fancy. So for me, I think most people can get by, and I got by for a really long time with literally just one bank account per property. And then what I would do is anything above a certain amount for that account, I would just transfer out into either like a distribution or like another account that would hold sort of like pre-tax profits. The only other account that could make sense, I would say, you know, again, for a beginner to not like, and maybe I would have done at the time, would be just to have like a tax account. But the reason I don't even really recommend that all the time now for myself is because a lot of times you don't know what your tax liability is going to be at the end of the year. Like you might have a ton of rollover losses from the year before. You might have done a cost segregation. So trying to predict what that's going to be and taking funds out of an account that maybe you could have reinvested those funds into something, and you know you didn't need to put that money aside for taxes. Again, it's situational, and like everyone should talk to someone about it, either a bookkeeper or a CPA, or just come up with their solution. But that would be the only other account that someone might want to consider as far as like how they're going to have money move. Yeah, I mean, I could keep talking on that, but just for the sake of kind of answering the question, yeah, that's how I think about it.
To add a tax account, what would you allocate in that tax account? Just anything that's a reserve after all your expenses are paid?
No, I would probably do it just on whatever you predict your like tax bracket to be, and then take that percentage out. Because that's the point of that account in theory would be just to not have a surprise tax bill at the end of the year that you don't have any money set aside to pay for. But again, for a lot of real estate investors, because of depreciation and because of a ton of like upfront costs and things like cost segs, a lot of times there isn't a big tax bill that comes at the end of the year for real estate people, especially early on, especially until you're making like serious money. So yeah, that's what that account would be for if you were to use one.
Yeah. Cool. Makes sense. And then any preferences in terms of, you know, banks you use, credit cards you use? Do you have any of those points hacks or do you stay out of that?
I'll give it to you. I have a link to all the credit cards that like we have either used or recommended. And then, yeah, just like the benefits of using them. When I would stand up properties, what I would do typically would be open a new credit card to then just get two things. You get zero APR interest for like up to maybe 12 to 15 months. So if you're going to finance or buy all the furniture, you don't need to pay it back immediately or have interest on it for a long period of time. So you could pay it back with profits. And then, you know, some of them, they just have like other benefits. But yeah, I have a spreadsheet that just has like all the credit cards, the benefits that we've either used or recommended. As far as banks go, yeah, we have a lot of people that use Relay or Baselane.
Yeah.
I use Wells Fargo. I mean, it's probably the worst option, but like, again, to me, it's as long as I can create new bank accounts easily, that's really all that matters. But like, I don't create a lot. If I have one per property, it's enough. Like there are some interesting things that you can do with like virtual credit cards and debit cards. But again, I think where I err, and I think the reason that our story resonates with people and, you know, like it's become popular is I'm like a simplicity freak. Like I'm always trying to solve for simplicity, probably before anything else except for profit. So for me, like if we're making money, that's great, but I want it to not come at like a crazy cost and complexity and things breaking and just not knowing where money is going or how it's set up. So yeah, I wouldn't get too tripped up in it. I think they're all good. The only thing I would say, this is just maybe from like, yeah, scar tissue of working with tons of different clients, is like the smaller banks, they can be annoying as far as like giving access to bookkeepers and accountants, which can be, you want to keep that pool as wide as possible so that you're able to work with all different sorts of people. And again, even like back to the simplicity thing, the more complex and friction there is on doing like the finances of your business, like the less you're going to want to do it already. And we all want to do it already as little as possible. Like, don't get me wrong. I run this business. I hate doing even my own books. Like I don't get excited about it. It's just what it is. It's the cost of doing business, but the best operators are the ones that know their numbers the best and like have protocols in place. So yeah, that's just my little caveat.
Yeah, totally. I use Relay, and that's been great. It's an online bank. It's super easy to add accounts if you need it. If you wanted to create a tax account or something, there's automations which, pull a certain percentage from your checking account or your escrow account. But that's been great to us, but not necessary. It sounds like you can do Wells, Chase, pretty much any bank works as long as you have a bank for that property. Again, thinking simple. How about softwares? Any softwares that you recommend that an investor should be looking at as they're purchasing one of these short-term rentals?
Yeah, the gold standard is QuickBooks. It's that way a little bit for a reason, and also just because it's kind of, well, because it's the easiest to get training on, or the most accountants use it, so they're going to pretty much want that. They don't want to, like for us, even we only work with people that use QuickBooks because it's so uniform and it just makes it easy to access things and not have to relearn things. And that's how a lot of people in the industry sort of look at this. Yeah. So I would say for that, if you do want to get into the world of making sure this is like really buttoned up, that is probably the standard. If not, like spreadsheets, honestly, can get the job done. But the thing with that is you still need like a way to track receipts and make sure that all your like account transfers are being categorized properly. Just so that a lot of times what we see when people don't use something like QuickBooks and they just use spreadsheets is if they transfer money from one account to another, it's being categorized as an expense or a profit when really it's just a transfer of money. And then for things like receipts, if you don't have a clean way to track receipts, it can be difficult. And QuickBooks does make that decently easy, that, you can either upload them directly or scan them from your phone. So it does help. And then, yeah, here's just like a bonus one for people that might, if you're watching this, just interested in like personal finance as well. I use Monarch, and it's just how I categorize all my personal transactions. Like I do a personal budget and a personal net worth every month. So QuickBooks, Monarch, and then Google Sheets is good. And then, there's just some little trackers that I'd recommend that sort of make life easier.
Yeah, I use Monarch as well. It's fantastic. And if you have multiple properties, you can link them all in one place to have that snapshot, which has been super helpful for me at least. And then when it comes to like categorization, of course, there's so many different categories. Like, how do you guide someone that's trying to figure out, okay, which item goes where? How do I keep on top of actually categorizing, like actually spending the time to do it? Like, what advice would you give for that person that maybe hasn't been the best at categorizing their expenses?
There's good and bad news. Like in real estate, there's a repetitive, it's called chart of accounts, which is just the list of the categories that expenses or revenue can fall into. So every transaction should fall into one of those. So that's the good part. The bad part is if you've been someone that just creates your own categories in QuickBooks or Monarch, like it might be creating a lot more complexity that's not needed, because the way that accountants take these numbers at the end of the year is they just basically go down the chart of accounts and they just take the numbers and transfer them into those forms. So it is, again, the good and bad is it's very repeatable and all this has been solved for. The bad is if it wasn't set up right once, it could be a lot of unwinding and undoing, which is why I am a proponent, not just like in a self-interest way, like just for everyone, just get it right at the beginning. And then it's so much easier after that. Whereas if you've done something wrong or makeshift the first few properties, it's really it can be really painful and annoying to try to figure out.
Right, right. And then you're typically using your Google Sheet template, or that's what you recommend for someone categorizing simply.
Yeah, in QuickBooks, you can find templated chart of accounts, or I can give you chart of account for real estate investor and you could just add that in. But yeah, that is pretty streamlined and uniform that, should be just repeated over and over.
Right. It sounds like obviously it's very important setting it up right the first time at the beginning. What are some mistakes that you've seen some other people make setting up their books? And it's just, you look at them and you're like, that is not how they're supposed to look.
Yeah, I think the biggest is just the commingling. Like there's so many people we talk to where they've just funded everything on their first property from personal accounts, personal credit cards, and it's just a mess. It's just very difficult to unwind and fix after. And then after that, it's, how do we get out of this? And how do we do it in a way that's, is it worth it or not? I would say that's hands down the biggest, mistake or issue that people run into. And then, yeah, other than that, it's like, I think a lot of times people overpay for things. Like they'll overpay for bookkeeping or accounting. Like if someone has one property, these things should not be super expensive. Like there are plenty of solutions out there to get help or get consulting to get these things done in the right way. And it's not like a major cost. Like every time I hear someone also that's like, yeah, I have a Delaware or Wyoming LLC, trust, and it feeds these three things. I'm like, dude, you have one property. Like, what are we talking about here? Like, again, that's a different category and people can make that decision themselves. I've done probably 100 plus hours of research. Again, I'm a real estate investor and I wanted the best solution for me. But I think people, they go overkill and overpay sometimes on some of these things. And it's just like, what are we doing here? Why are we doing this? Like, so I think we can't lose the plot. And the plot is, again, for me, simple, low cost, I'm getting something out of this and it's just in a way that serves me and benefits me instead of just, doing something because I heard it on Bigger Pockets or a YouTube video or, someone sold me on something.
100%. 100%. Yeah. And we have plenty of resources. I know you have tons of contacts. I have tons of contacts to build this team of people that can all collaborate to at least give some clarity around, who do you actually need on your team to make this work? And yeah, I think that ties in nicely to the relationship between the bookkeeper and the CPA. So especially for the strategy after the cost segregation and going after bonus depreciation, what does that handoff look like from the bookkeeper to the CPA? Like, what does it take to have clean books?
Yeah. So I think the way that I do it personally for my real estate resonates with people. So I'll just talk about that. Like I like to just talk about what I do instead of telling other people what they should do. And if it resonates, great. If not, just you could leave it. But like for me, again, when I was getting into this, I was like, I'm paying so much for bookkeeping and accounting. And I feel like the quality just like sucks. Like these people, every time I'm on a call, I have to repeat myself and I'm being billed per call. And, like no one, this isn't tactical. A lot of that has, again, sort of flattened with Claude and ChatGPT and Perplexity and just being able to get advice on situations. So for me, and the way that I think about it is my bookkeeper is doing my books every week and then every month. So I get a weekly and a monthly report because I want to know my numbers. Like I don't know if it was from the Founders podcast or maybe one of the John D. Rockefeller books I read, but like he used to get a report about his business financials every day. And what I found in working with different businesses, the people that know their numbers the best, they are usually the most successful. So for me, it was super important. So anyway, I get my books done weekly and monthly so that I can make decisions on the business. Where do we have leaks? Where are we doing worse this month compared to last year this month? What changes did we make that led to, our month over month change, whatever it is, there's seasonality. And again, with different tools now, Perplexity and Claude and, pairing this with, PMS data, like it's super powerful. So anyway, I'm getting my personal business numbers and books done, often. What I then do is I have a CPA that I pay a flat rate basis to do my actual taxes. Okay. So that's just filing the return. Again, it should not be super expensive. If someone's quoting you over, I don't know when this is going to come out and this could be for years, but if it just seems like a crazy number, it probably is for a single owner or just a few. But anyway, so they're paying to do the tax return. What I then do is I pay them to do a few hours of calls every year. And those calls are just strategy. So what they're doing on those calls is they're, sitting down, we're going over my financials for the year up to that point, and we're just talking through what can or should be done. We usually do that in Q2, Q3, just because Q1 and Q4 are really busy and, that's the worst time to talk to an accountant. So for me, the way that I think about it is bookkeeping is done often, weekly, bi-weekly, monthly. The numbers are clean and current. And then from there, I do a few hours of paid consults. This isn't crazy. It's maybe 150 to 250 an hour for a couple hours in Q2, Q3 to validate strategy and any like tax strategy. And then they just do the filing at the end of the year. And, those meetings mid-year should be enough that they know or have what they need so that come tax time, they understand my business. And then they're just getting clean reports at the end of the year. Like, I don't want to be on the phone with my CPA at the end of the year. Who does, and like they should have what they need to just file the return and, we go on. So that's how I do it. It works really well for me. It works well for a lot of people that just don't want to be swapping tons of emails and going back and forth with their CPA and all this intense stuff. It just, again, I like simple and it works. Like I'm not losing anything, I feel, in that system compared to something that's like overly complex.
Yeah. And it's consistent. I've been talking to a lot more CPAs, and one of their least favorite things is someone coming to them at the very end of the year and then starting the conversation. So sounds like you're doing it kind of midway through the year to stay in front of that. So you're not just slamming them at the very end where you're not going to get the quality and the attention to detail that you otherwise would if you planned your taxes with them and your books with them throughout the year like you do. So I like that you're doing that. How about one thing specific to short-term rentals is that launch and all the furniture, all the amenities, the cornhole sets, all that. I know you briefly touched on it, but tracking all that do you have a strategy for tracking the launch or the design fees as well as just like all the receipts that come from that?
So what I would say is, like, for me, once I know a property is going to happen, like we've either closed or about to close, where we've passed due diligence, which, don't get me wrong, there's costs, like up to that point too, deposits, maybe like flying out to go see the property. Those, like I would sort of just like track. But then once it's more official, what I would do is I would start the new bank account. I would fund it with funds, the personal funds, right? Like just transfer them in. And then hopefully I'm just starting clean slate from that credit card, debit card, bank account, paying for all the stuff for that property. So if we're going to launch it and we have, a new designer that we're going to pay, if they take credit card, it's tied to that new business or new bank account for that specific property. And again, it's isolated. Like, I think the whole purpose of having the bank account, credit card, debit card is just isolation. You just want the swim lane around just knowing what this is so that it doesn't have to be done later. Like, we all have awful memories, and like the worst thing in bookkeeping or accounting is when someone's like asking you about transactions from like 5 months ago. You're like, bro, I have no idea. And then what most people do is they get lazy and they're like, screw it, I don't care, I'm just gonna like wave it off. But like, there's a huge cost to doing that. Like, if you don't get that sorted or do it the right way, like there's risk. So yeah, for me, if I know the property is gonna happen, like it's gonna close and then we're gonna go forward, I will, do those things. I'll fund a new account, have those credit card, debit card, and then it's pretty clean from day one. And then for other things that like were costs before that, I'll just make those marked or we don't have to use like the fancy terminology of like how to do that in QuickBooks or whatever, but just like, make it known to whoever is going to be doing the taxes, or, after the fact, if it was like, oh, I bought a mastermind, or, I bought flights or whatever, before the thing existed or before an entity exists, you can just, have it made known after the fact. But that's the timeline of how I would do it.
Yeah. And receipts, do you have a recommended practice for all those?
Yeah, I would just do a Google Drive. Like, it's easy. You can use the scan feature in Google Drive. If you want to get fancy, and like, it would be great is if you did it by month. You just do like this property ABC, and then, May 2026, the receipts, you just pull it up, scan it in with the feature. Again, that's if you're not using QuickBooks. If you're using QuickBooks, it's pretty easy to do it there, and it'll pair with a transaction. But yeah, Google Drive and then the scan feature there is pretty easy.
Yeah. Cool, man. And then just thinking about like hiring a bookkeeper, right? So, of course, people will be investing in these short-term rentals with, maybe one or two already previously under their belt. But for the most part, it's going to be, 1 to 3 properties that they're trying to manage. And, at what point does it make sense to bring on a bookkeeper? Like, what's your honest take on that?
Okay. Have you ever read the book Buy Back Your Time by Dan Martell?
I've read summaries of it, but not the full thing.
Doesn't matter.
Yeah.
It's almost one of these things where it's like the title is good enough to understand the book.
Yeah.
Kind of like Who Not How or Never Eat Alone. But basically it's like it comes down to two things. Like, what is your time worth? And then also, are you competent enough to get it right on the front end? So if it's so again, it's just like depends. If it's someone that has no time, like delegate, and their time is very valuable. Just everyone, whether you work with a bookkeeper, whether you do anything related to bookkeeping, it's good to know your dollar per hour. How much money do you make divided by the number of hours in a year? And then you know what you have, like a rate that outsourcing things makes sense. And it shouldn't be exactly your dollar for hour, but it could be less than that. But like, for me, I did bookkeeping myself at the beginning. And this was like 12 years ago when I was really just starting. And, I had a job, but I wasn't making a ton of money in real estate. And I was like, I want to learn this. I spent the time, I paid like some accountants to teach me stuff, and then I was doing it myself. It didn't take long for me to just be miserable and hate it and then wanting to get rid of it. But I knew the basics and I at least, tried it. So I think for a lot of people, it then comes down to, that's the time part of it, the competence part of it, of like, what I also realized is I took the time to learn the stuff. A lot of people, they don't, they'll maybe just like try something, and then it takes a lot of like unwinding and fixing after the fact, which is unfortunately very expensive and time consuming. So, I mean, it's a little bit of an open answer, but yeah, I guess I look at it of like, it's situational. I tried it for myself and I was doing it. I wanted to get like a base framework and be able to do it. And then from there, I handed it off to someone when I absolutely hated it and I felt like I was making mistakes and my time could be spent other places. If someone is starting out and their property is not making a lot of money and they're really available, they have tons of time, yeah, it could make sense to do it, and take the time to do it right. But I think for a lot of people, it's low cost enough that it can be delegated to someone else who's going to do it right. And they can maybe teach you along the way. And then, it's off your plate. So yeah, not a one size fits all, but I think as an exercise, everyone should know their dollar per hour just for delegation in general. But then also once you, understand like what goes into something, you'll know how much time it takes, but then also like, am I going to be able to do it well or not? And if, you know those answers, you'll be able to make a decision.
Yeah. And roughly how much time would you estimate, let's say someone going the DIY route, what would you estimate that to take on a weekly basis?
Per property. So again, it depends on a lot of factors, how many bookings they're getting, how many things that they need to, let's say, do transfers for, or if there's claims or things break at the property. But what I would say is probably, it should be 4 to 6 hours a month, maybe per property. There could be some like economy of scale and being able to do things better, but it depends like how thorough people are. And again, if they're just doing all the things that like I would say are proper. Let's say 3 to 5 hours. Actually, I'll go a little bit down.
Yeah. And assuming they're doing it right, of course. Like that's the other part of the equation is the competency. But let's say they're like, hey, you know what? I'm so busy on my career and my full-time job. I want to hand off bookkeeping. Like, what does that look like? What is the cost of doing something like that? And yeah, like what would the steps for working with a business like yours look like?
Yeah. And whether you work with me or someone else, like here are just some things that I would probably think about or recommend. So the access to the information, it should be done securely. So getting access to bank accounts or credit cards, that's normal, but it should be done for accountant or bookkeeper view only. And not all these, and not with even like LastPass or giving username password. You could use those for other things, but for the actual bank account, I don't really recommend that. Just because with bookkeeper accountant view, the way it's set up is, like we can't actually transact or do anything in someone's bank account. So that's really important. As far as like the way it gets set up, typically any bookkeeper you work with or accountant, like they should take time at the beginning to understand the business. And like, so what we do for every client is we understand the number of bank accounts, credit cards, debit cards, properties, QuickBooks accounts. What we then do typically is we'll like do a visual map of how money moves, and kind of that's important to explain to a bookkeeper accountant as well, like what's happening on a recurring basis so that they can see that. So security, like the onboarding, what we found is just the beginning is so important that if it doesn't go well, then usually people have an awful experience with their bookkeeper or accountant. The other thing is communication. So like bookkeeping is, I'll say, like, it's fairly commoditized. There's definitely little nuances and people can do it better or worse than others, but communication is just as important as bookkeeping. So like for us, we're obsessed with communication, responsiveness, sending weekly reports, things like that. So like if a bookkeeper that you're talking to is not responding to you like same day when you're interviewing them, it's a huge red flag. That's for anything. Like if someone is not handling stuff during an interview process how you want, you can assume that they're going to handle it worse even when you work together. So the interview process for any of these starts the second that contact happens. At least that's how I look at it. And then, working together, there's different price points, but in general, I would say for most people with one property, you could probably find a good bookkeeper for, I would say anywhere in like, the $200 to $300 a month range. Could be less, could be more. It depends on the type of property or the number of reports you're needing, and then usually the way the bookkeepers do it is as more properties get added, the price per unit or price per door goes down. So it could be starting per additional unit at 100, then 75, then 50, and then maybe it caps there. So again, it depends on the details when people need their reports by, but like in general, the bookkeeping should pay for itself from the standpoint of time saved, which I know it's hard to quantify, but then really just more so in like the transparency, like the views into the actual business to know where things are going, like that is the number one thing that I would say people say. And I've said before, it's like, I don't even know if I'm making or losing money on this anymore between the number of transfers and money going in and like random payments that, for a booking a month ago that, we got paid out late or whatever. Like it's hard to understand that. So, but yeah, that's what I would say as far as like setup and then pricing and, just what to look for in a bookkeeper.
Yeah. Perfect. Yeah. So I guess that person that's ready to get going, buy that first property, like what are the simple next 3 steps that they need to do to make sure their books are clean?
Yeah, I would definitely say setting up the bank account would be a good thing. Yeah, whether you use QuickBooks or not, it would be then to just have some system or process to track what's going on. If it's going to be a P&L spreadsheet template that you grab from us, one that you find online, that is just going to be important to know where money is coming and going. And then also just a way to track receipts, also very important. And then, yeah, just like talking to some bookkeepers or accountants. Honestly, like what we tell people also, even in some cases, is you can start working with someone, or some require like longer term commitments. We don't. So it's like you could start working with someone, they help you get things set up, and maybe they're tutoring along the way. And then you could decide to take it back in house and do it yourself, or let them keep doing it. So I think that's an important option that people like remember and consider as well. But anyway, I would say decide like the system you're going to use. So if it's QuickBooks, spreadsheets, Google Drive, whatever. And then also if you're going to set up a bank account, which, I do for mine. So that's what I would say just in general to kind of get started.
Yeah. Awesome, man. No, super clear, super simple. So someone approaching that close date, setting up that bank account, that credit card, having a way to track receipts, likely a Google Drive or something like that, setting up QuickBooks online, then keeping your books clean, checking that either weekly, bi-weekly, at a minimum monthly, and then making sure you have the right format for it. So like you said, a template that you can provide or one that they get online, and making sure they are staying on top of those transactions and categorizing them appropriately. And if they need a hand, reaching out to someone like Jonathan or a bookkeeper that can help them actually keep these books clean. Because what we don't want to do is backtrack and have to go through all the past expenses and past receipts and the headache that can bring to a process that could be so much simpler if we set up these fundamentals at the beginning. So anything I missed there or...
No, you nailed it. It's just, don't get me wrong, guys. Like, it's the least fun part of the business. Like, like I said, I think that's why people do like working with us, is just because like I'm not a bookkeeper, I'm not an accountant. So like I'm always trying to think, how can we make this as painless as possible? It is not the part of the business that gets me excited either, but it is the part that I would say separates a lot of really top-notch investors from not. And also it's just something that you can do once right, and then it can be set up and running with very little effort. But if it's set up wrong or just not set up at all at the beginning, it can really suck. So, take that to heart. Learn from me of overpaying my taxes, 24,000. I don't want anyone listening to this to have that experience. And just know that, there are ways to make it simple and straightforward, and it's been solved before. And, ultimately back to the dollar per hour stuff is like, people like Ryan, people like, all other people that have really big successful businesses, they focus on what they're good at doing. They focus on what actually makes money for the business. And so I think in general, bookkeeping, but also other things, this isn't even related to bookkeeping, is just like seeing where you can remove yourself from the tedious admin, non-monetary parts of the business is such a cheat code that, I definitely wish I would have known sooner in a lot of different parts of my business. So yeah, that's just a last thought related to bookkeeping, but other business parts as well.
Yeah. Awesome. Well, thank you for your time, man. If someone wants to reach out, what's the best way to get in contact with you?
I'll send over our site and social media and stuff, but you can message me on Facebook, just my name, Instagram, JONJFARB, email, and our website as well. You could book a call with myself or, anyone on our team just to chat, kind of go through your situation. If we can help, we'll say. If we can't, we're not pushy either, just to let people know, like, hey, do this or use this spreadsheet. And then, if you need help, you can always come back in other ways. So yeah, however we can help, happy to try to do it. I remember what it was like when I was setting mine up for the first time and just all the unknowns, and, it's overwhelming and you don't want to make the wrong decision. So if anyone needs help, just feel free to reach out.